The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Matt Justice here for Tackle Trading. I was running a scan today, given the fact that the market just does not want to go down right now, and I need to offset some of my bearish trades with some bullish trades out there, and a lot of stocks are a little overextended right now. A lot of stocks are, basing to a certain extent that you can't really trust it. So I was looking for some retracements at a support level in the market. So I ran a simple scan in a software called Mock Trader that I use. It was developed by individual by Tom Joseph, an amazing programmer. Regardless, I was looking at this scan and I was saying, okay, I want to find a stock that's at a support level of which that I can get into the trade with very little risk. And so what I found, and it was about 5 stocks down in the list, I found a company called FLT Technologies. The symbol of that is FLT. And what I like about this, number one, is it's a nice little bullish uptrend. Number two, the pattern is a bullish retracement. The bullish retracement is a standard and a high probability type pattern for the stock to continue to go back up. Now, it is a slowing momentum pattern, so you have less probability on a retracement than you do, say, a breakout. But at the same time, I kind of like it, given the fact that if the market breaks out, Fleet Core should go up as well. So I'm looking at this right here, and I'm saying, okay, is it coming into a support level? Do we have an upward movement in price? So number one, when you deal with a trend is nothing but a higher high, higher low, and you want to get into the stock as it starts to go back up. So looking at this right here, we obviously have the higher high. It's coming back down. As you can see, the escalation is pretty quick on the downside, but then it starts to slow back down, and you got a couple hammer candles right there. This is called a confirmation candle. So now what I'm going to do is I'm going to say, okay, this is what I call a trigger. It triggers us to take some action. And what I'm going to do is I'm going to compare buying the stock versus buying a call option. And obviously, I will buy the call option because I'm primarily an options trader. So here I'm going to go to the risk graph, and I'm going to tell the risk graph, which is nothing but a calculator for stock traders and option traders. And I'm going to say, okay, if I buy 500 shares of this company at the current price of, 142.28, 122.48, we're going to invest about $14,000 into this company. That's what we're going to put into the company. It's a debit trade. Our max risk is about 71,000. That's if the stock goes to zero. Obviously, I'm not going to hold it till it goes to zero. So now, if it goes up to its prior resistance level right around 150, we can make approximately $4,000 in the trade if it goes up to 150. But we got to put literally, if you're talking about with margin, let's pull up a nice little calculator here, and let's say, okay, our entry price of 142 times 500 shares equals $71,000 divided by 2, because we're going to use margin. That's still going to mean we have to put $35,500 into the stock to make $4,000. Now that's a 10% rate of return in a very short time frame, and that's really, really good. The problem with that is you have to buy the stock, which means with margin you have to put $35,000 into the trade. That means you're putting a lot of capital in to make 10%. Well, instead of doing that, I'm going to go to the risk graph again, and I'm going to say, okay, instead of buying 500 shares, FLT, we're going to simply buy 5 call options, which gives me the control over 500 shares of stock. And I'm just going to go at the money to a certain degree. I'm going to apply that. Now, at my target of 150, I can only make about $3,500, but I only have to put in about 700 times 5, about $3,500 into the trade. So I put $3,500 into the trade in the option instead of $35,000. Instead of making $4,000, I can make about between $3,200 and $3,500, which is close to a 100% rate of return. That's why I like this trade, and it's a very conservative target. It's right there at the prior level of resistance. If you're a little more aggressive, you could target Fibonacci extension levels, and if you targeted a Fibonacci extension level, draw my nice little little extension, up, back, down. We're going to target somewhere around the 160 level, which on the risk graph would be, more than likely somewhere around a $9,000 to $10,000 gain. My risk, I'm going to put a stop loss right underneath 140, right around 139. I'll probably take about $1,000 of risk in the trade, and that is why I like the call option on FLT. Look for us at www.tackletrading.com. Hope you enjoyed the video, the comparison against the stock trade versus the option trade on FLT, as well as talking a little bit about technical analysis. Once again, Matt Justice, Tackle Trading. Thanks, everybody. Have a great weekend.
Get in the game. www.tackletrading.com